Hey, David Krashenski here from DK Home Loans. Today I want to talk about what loan program is better, a FHA loan or a conventional loan. Now, if you talk to a real estate agent, most likely you're going to hear that sellers or realtors that are listing homes for sale prefer a conventional loan, and this is very true. But it's worth examining to see if it's better for you as a borrower to look at an FHA loan with the recent decrease in mortgage insurance premium, because it could actually allow you more affordability, to be honest with you. And so we want to take a look at those. But first, we're going to get into what is an FHA, what is a conventional. Here's a quick overview for you on an FHA loan. The minimum down payment is 3.5%. The monthly mortgage insurance with the 3.5% down payment is 0.55% annually. Typically, the minimum FICO is 580 with most lenders. There could be other lenders out there that will not let you go above a 620 or a 640. There could be program restrictions. So generally speaking, with 3.5% down, the minimum FICO, according to the FHA handbook, is 580. You can go below 580 with 10% down, but for right now, we're just going to look at the 3.5% down. And typically, the maximum debt to income ratio they want to see is about 57%. I know the slide says 55%, but typically we're not approving people up to 57 when they're just getting pre-qualified. So for this purpose, we're going to look at 55%, but it does depend on credit history. It depends on FICO score, a lot of other things, if there's reserves, if there's any compensating factors. Here is a conventional overview. And so if you're not a first-time home buyer, the minimum down payment on conventional is 5%. The minimum down payment for first-time home buyers is 3%. And there are some caveats to that. If you're a low to moderate income borrower, you can sometimes get 3% down as well. But we're looking at 5% for today's purposes. Mortgage insurance is based on your credit score, so the premium will fluctuate depending on where your score is at, where the loan to value is at, where your debt to income ratio is at. Minimum FICO score typically is 620 on conventional, with a maximum debt to income ratio of 50%, depending on, once again, your credit history, your FICO score, and the amount of reserves you have. If you have 6 months reserves, you could typically go up to 50%. If you don't have 6 months reserves, most of the time you're looking at 45%. So for the example in this video, I want to take a look at what the payment is on an FHA loan versus conventional. So here we are. We got the FHA loan side by side with conventional, looking at the monthly payment, all things being equal, taxes equal, insurance equal. This is based off a $400,000 purchase price with 5% down on both loans, a 740 credit score. The debt to income ratio is under 40 for the conventional, so the rate would be a little bit better, and a monthly income of $5,000. Property taxes and homeowners insurance are estimated at this point. But as you can see, FHA interest rate is 6.105 today. Today is March 10th, 2023. And I'll break down the APR in the comments section for you, but you can see 6.105 is the note rate, $27.95 for a monthly payment, versus a conventional loan at 7.214, where the payment is $29.97.96, which is about $200 a month higher. And this is with a 740 credit score. Let's take a look at the next breakdown here, which is even higher. We're looking at same scenario, $400,000 sales price, 5% down, 700 FICO, so the FICO score is lower. Debt to income ratio is still 40%. Here, we're looking at a much worse payment, $31.08 versus $27.95. So now we're over $313 a month higher with a little bit lower of a FICO score. So as you can see, the FHA loan is really looking attractive right now. If you have questions on that, I'm going to put my contact information up here. Reach out to us. We're happy to work up these scenarios for you. We're happy to tell you where the rates are at. The rates change every day, but this is going to give you a good indication of why we think an FHA loan's a lot better right now. Thank you so much